Hello and welcome to MCQs on Ind AS 19 employee benefits. One of the very important standards applied in practice. Let us see how much you are prepared for this standard. Test your understanding of Ind AS 19 with the help of few MCQs. An entity contributes to an industrial pension plan that provides a pension arrangement for its employees. A large number of other employers also contribute to the pension plan, and the entity makes contribution in respect of each employee. These contributions are kept separate from corporate assets and are used together with any investment income to purchase annuities for the retired employees. The only obligation of the entity is to pay the annual contribution. After this long story, this important line has appeared. The only obligation of the entity is to pay the annual contribution. The pension scheme is and this is also one hint, a large number of other employers also contribute to the pension plan. So it's a multi-employer plan because of the first line, and it is a defined contribution plan because of this line. Both together, please reply what is the right answer. Multi-employer plan and defined contribution scheme, multi-employer plan and defined benefit scheme, defined contribution plan only, defined benefit plan only. Yes, please reply first. So many students have replied A. Yes, your answer is right. Option A, tick mark. Question number 2. Which of these events will cause a change in the defined benefit obligation? Will cause a change in the DBO, change in the mortality rates, or the proportion of employees taking early retirement, change in estimated salaries or benefits that will accrue in the future, change in the estimated employee turnover, change in the discount rate used to calculate defined benefit liabilities and the value of the assets. And the last option is all of the above. Which is the correct answer? The student has replied E. Yes, you are right. All the above changes would cause a change in the defined benefit obligation. Let us ask computer, what is the right answer? E is the right answer. Very good. Let us try question number 3. An entity has decided to improve its defined benefit pension scheme. So this is a defined benefit scheme. The benefit payable will be determined by reference to 60 year of service rather than 80 year of service. As a result, the defined benefit pension liability will increase by 10 million. The average remaining service life of the employee is 10 years. How should the increase in the pension liability of $10 million be treated? Will be treated in the financial statement. One is the past service cost should be charged against retained profit. Past service cost should be charged against P&L account. Past service cost should be spread over the remaining working life of the employees. And the last option, very funny, past service cost should not be recognized only. So what do you think? What is the right answer? A, B, C or D? Most of the students have answered B. It should be recognized in profit and loss account. Right answer. Tick mark option B for question number 3. Which of these elements are taken into account when determining the discount rate to be used? When determining discount rate to be used, one is market yield at the balance sheet date on the government bond, then investment or actuarial risk, specific risk associated with entity's business, and risk that future experiences may differ from actuarial assumption. Discount rate is based on market yield on the government bond. Is it right? So the answer is right. A. Tick mark A. This all we have discussed in the classroom. Now the next is which of these assets should be included within the valuation of plan asset. Unpaid contribution, unlisted corporate bonds that are redeemable but not transferable without the entity's permission, a loan to the entity that cannot be assigned to a third party, and the last is investment in listed companies. Which of these assets should be included in the valuation of the plan asset? Usually this question is not asked in the exam, but what is the answer? The answer for this you tick mark will be option D, valuation of listed security, because others are uncertain. This is unpaid contribution, forget it. Unlisted corporate bonds, but there is a restriction on the transferability, and similarly there is a restriction on this loan also. So the answer would be listed company shares or listed company investment. Tick mark option D. One more. Question number 6. An entity has decided to protect its pension obligation with an insurance policy. The insurance policy permits the entity to cash in the insurance policy. Is this insurance policy a qualifying insurance policy that will be included in the plan asset? Insurance policy permits the entity to cash in the insurance policy. Will it be included in the plan asset? The answer is no, because insurance company will make the payment. Answer is B. It is not included in plan asset. Okay, one last question. An entity operates a defined benefit pension plan and changes it on 1st January 2004 to defined contribution plan. A defined benefit plan changed to defined contribution plan. The defined benefit plan still relates to past service cost but not to future service. The net pension liability after the plan amendment is $70 million and the net pension liability before the amendment was $100 million. How should entity account for the change? How should the entity account for the change? This is easy. Before the change the liability was 100 million, after the change it is 70 million. So 30 million liability will reduce. 30 million liability will reduce. So the entity will recognize a gain of 30 million. Entity does not recognize a gain. Entity recognizes a gain of 30 million over the remaining service life. Entity recognizes the gain but applies the 10% corridor approach. This is old accounting. 10% corridor approach not relevant anymore. We have not discussed that also. It is not applicable. It was old system. So the answer is A. Gain of 30 million will be recognized. Is it right? So these were few important MCQ question of Ind AS 19. Please subscribe to our YouTube channel AS Foundation, and we are going to upload more MCQs on this subject. Our channel is AS Foundation. Thank you very much for joining us today, and also share this with your friends who are in final. They will also be benefited. Thank you very much.